Hey guys, Akil Stokes here. Welcome back to another weekend trading edge video. Your look around the markets where I show you what's on my radar for the week ahead. I've got a handful of opportunities to share with you once again. And of course, at the end, I'll give you an update on our DKC strategy journey. So we're gonna get started here on the pound yen, and we haven't looked at the pound yen in a while. This was a pair that we did very well on for a good period of time earlier in the year, and then the opportunities kind of dried up. But we are back in action with our most recent violation, right? If you guys remember kind of in the past, right, we had a violation of this previous level of structure right here. And we were looking for price action to come to this previous level of structure right here. You can see our inside or our previous outside level of structure, right there, which had confluence from our previous inside levels of structure here and here. Well, you can see that if we go into our present time, we just broke and closed above that. And if you've been following the video for some time now, you know the process and the rules that I follow. It's a four-step process called IPDE, identify, predict, decide, execute, where I identify what price action has done. Based on what I identify, it allows me to make predictions. And a key part of that identification process is seeing if price action gets to important levels of structure, and then seeing how price action acts or reacts at that level of structure. And if we can violate it, and the violation is defined by a higher high, higher close, so a break above, close above, then my expectation is that we're going to continue higher. If we're going to continue higher, right, see the whole little kind of if then, if we're going to continue higher, then we're likely to go to the next important level of structure, which is going to be right here on the pound yen, right? So we go back to kind of reality here, zoom in, and you can see here is our opportunity, right? From where we're currently trading at about 175 even, right? Up to about 180. So a massive amount of room is back available on this pair for kind of the second chance at this bullish continuation. Again, this is a bigger opportunity that we've been tracking basically the entire year now. So as always, I'm a pullback trader. So what I'm looking for is a pullback into structure. So after price action kind of rallies up, we look for a little bit of relief. A relief comes in the form of a pullback, look for a pullback, and then we're looking for opportunities and most likely, because it's 500 pips away, multiple opportunities to get involved on the way up. And each time price action retraces, that's going to give me another opportunity to buy. And if you're someone that does if you're a true trend follower, and let's say you do like a position adding strategy, this is an awesome opportunity to kind of scale out and scale in, scale out and scale in, scale out and scale in, until we get to that ultimate destination. So keep an eye on pound yen. We'll be keeping an eye on this probably for the next few weeks here on the Trading Edge video, but another massive potential trading opportunity. So next up is the Euro Aussie. We're going to start here on the daily as well. You can see most recently price action had a nice rally up. We then came down and violated a previous level of structure right there. Had a failed extension, right? Little complex pullback here, and then took out those lows for the bearish move. And in more recent times, even took out our most recent low. So the question is, if price is going to continue lower, where are we likely to continue lower to? Well, our next important level of structure is going to be this area right down here. So this is going to offer a potential counter trend trading opportunity. So how can we take advantage of this? Well, let's see, right? If we take a one-to-one measured move, right? So if I take the length of this swing, let me just make sure I got it measured on correctly, and I copy and paste this and drag it on to this retracement right here, you're going to see that we're going to have an AB equals CD pattern, or a one-to-one measure move down in that area. I can also team that with a Fibonacci extension, taking it from the same swing high to swing low. Let's see if there's any Fibonacci confluence in there. Not really. We have a 127, a little bit above, a 1,414 in the middle. The 1,414 doesn't really mean much to me, so not a lot of Fibonacci confluence. I bet we would have, however, a 1,618 inversion if we take it from our pullback right here back to our extension. Let me try that again. I got to go back up. Let's go swing high to swing low right there, and then back up high. Yep, a 1,618 is going to be right in there, and probably a 50% retracement, Fibonacci retracement from our swing low to swing high. Nope, not a 50%, way off, but a 618 in there as well. So a nice little confluence zone between our previous level of structure and our two quote-unquote golden means when it comes to Fibonacci's. And the golden mean is the 618 and the 1618. Those are the, if you understand Fibonacci's, those are the most important levels. Those are like the magic numbers and ratios that exist in our body and all aspects of life and all that fun stuff. If you ever want to go into kind of like a deep, weird rabbit hole, just start researching Fibonacci, and it may blow your brain up, but it's also very interesting as well. So anyway, regardless of all that Fibonacci talk and structure talk, this is the area in which we're looking for price, this final push down to kind of complete. And again, what we're doing is we're just putting together a lot of clues. We're taking all of the technical techniques and tools that we use in the market, Fibonacci, structure, harmonic, equal measure moves, stuff like that. And we're seeing, hey, do they all tell us a kind of a joint signal? In this case, they're all lining up at the same area. And again, as traders, what we're looking to be is basically detectives, right? And detectives, lawyers, whatever you want to call it. It's one thing to have one clue in the market, right? You can maybe make a case with one piece of evidence, but when you have multiple pieces of evidence pointing in the same direction, it's more likely you're going to get the judge and the jury, I should say, to kind of be on your side. By the way, there's a great show on, I think it was Amazon Prime, called The Jury, where it's this reality show and they set this one guy up where the whole thing is fake, but he thinks he's on an actual jury. If you get a chance to watch it, it is hilarious. This is Akil Stokes' recommendation of the week. FUBAR is good as well. But anyway, let's go down to a lower time frame. 4-hour chart. And again, what we're looking for is we're looking for a price to complete down at this zone. We're looking for, obviously, a hold, right? It's one thing to just kind of be aggressive and put a buy order down there, right? Although we have all this stuff lining up and we can make a pretty accurate prediction that this is where price should terminate, we always want to wait, right? We don't know. I want to be predictive in my analysis, reactive in my execution. So I want to be predictive in where I think price is likely to go and what I think price is likely to do once we get there. But I still want to be reactive. I still want price to kind of give me that signal first. And that's the difference between more of a conservative trader and an aggressive trader, right? I'm still pretty conservative, meaning I want to see a sign that my prediction is right before I invest any money in an actual call. So we'll be looking for price action to come down to this level, 159 even, nice even handled number there. And we'll see if we can get a nice little counter trend pop off of this zone. Next up is going to be the pound Aussie hourly chart. My notes are already on here, so I'm just going to leave them on here. We looked at this last week for a little flag pattern break. We ended up popping out in the opposite direction here. But then we put in a little bit of a consolidation. The market didn't really make up its mind on which way it wanted to go, and it ended up consolidating. And, well, as you know, consolidation often breeds pattern formations. And what we have here is a deep Gartley pattern. So this is a bullish Gartley pattern, meaning you'd be looking for a buy down here at 186.34s. I don't see any reason to look for any type of longer continuation or anything like that. But yeah, potential buy here. Let me just see. I think I didn't have Cypher on my radar. I think we were a little bit shy with our C leg, but let me just double check that. These are secondary pairs for me, meaning they're not in my active trading portfolio, so I don't pay as much attention to them as I should. Yeah, so we just missed a 127, so no potential cipher pattern here as well. So yeah, just a bull Gartley. It's going to be a pretty decent risk reward, just kind of roughly measuring this out because it's so deep. Your stops are most likely going to be somewhere down here. Your targets, I would say, are going to be probably first target, maybe up here somewhere. Let me just draw that on, kind of make sure I'm in the right realm here. Almost dead on, yeah, right around that area. You can see you can get a pretty decent risk reward on this potential pattern formation. So yeah, pound Aussie, Gartley pattern, potential buy. Next up, we're going to go to the euro pound, and this is always an interesting one because the euro pound, I've always nicknamed it the molasses pair because it moves so slow and choppy. It's like the sloths in that I forgot that Disney movie where they're working at the DMV and they're just taking their time to do whatever. But from a technical perspective, it's a decent opportunity. We just broke and closed below a previous level of structure. I'm going to bring that line down right there. You can see we ended the week with a lower low, lower close. Our next level of structure here isn't until a quite bit lower, right? You can look at a minor level being right down here, with most likely our major level. Let me just bring some volume in, going to be a little bit lower. I didn't do a lot of work on here, so I should probably do that, right? This is a video where we're doing live analysis, so you can see the volume picks up about right here. And by the way, if you guys didn't know, this is live analysis. I just kind of go through and kind of figure out what I want to talk about. Let me just do a few more things here. Similar to what we did before, I'm going to take our most recent move, our swing high to swing low here. Look for a potential AB equals CD pattern, see where that would put us. Going to put us right there, so we're not getting a lot lined up. And let's take our Fibonacci extension, swing high to swing low once again, and back up. And we're not getting a lot lined up. So we have a 1-6-1 a little bit further, our high volume spike a little bit lower, 127 a little bit higher. So this one's going to take some work to figure out where we want our targets to be, and hopefully we get more insight on that as price, or if price decides to retrace first back up in the previous structure, right? That will help us a lot, because now we have a whole different swing that we can do our measurables for. But just to kind of give an outlook for the week ahead, potential bullish, all right? Potential bearish continuation opportunity down to 85 evens, and maybe even down to maybe 84.60s here on the euro pound. Just be warned, it's a slow one, so it'll probably test your patience. Probably test your patience. There we go. All right, next up, New Zealand yen. We'll keep our analysis on here from the live room. By the way, if you guys ever want to join the live room, we do live sessions 3 times a week, both a London and a New York session over on the platform. Feel free to check it out. Spend a few hours with like-minded individuals looking at trading opportunities, talking that trader talk. And of course, if you're someone that has ideas and you want to share them and you want me to review them or Jason to review them, it's a perfect place to come in and bring your ideas and see what our perspective and opinions are on your trading opportunity. So check it out, www.tier1trading.com. It is part of your trial membership, a 14-day trial membership. Head over to the platform and give us a join to record it, so you can always watch the recording if you're not able to make it live as well. But we're looking at a head and shoulders pattern here. And of course, with head and shoulders patterns, right, there's 2 ways we can do them. Maybe not, of course, if you're new, there are 2 ways you can do them. One, you can look at a horizontal neckline taken from the deepest first retracement right here in this case, or you can look for a slanted neckline. Let's see if I can steal this. No, I might as well do a new one. We can look for a slanted neckline where we kind of connect the dots and draw it like a trend line. Now, which one you choose has more to do with your philosophy in the market, right? I'm not a believer in kind of trend lines. I follow horizontal support and resistance, so I always do kind of the straight one left to right. It doesn't make it better or worse, but you want to know which one you're getting into. That way we have that consistency. In this case, either way, we violated that line, or that lines, right? Confirming our head and shoulders pattern. Next question is, if we're going to go higher, where are we likely to go higher to? You can see we have a nice zone measured up here already, 2 zones, right? This would be the first zone where, we may run into some danger. The second zone is going to be basically all the way at the highs up here around 86.50. So some good potential movement here. What I'm looking for now is one of 2 things to happen at this level. One, we get some kind of sideways consolidation before a pop, like a high and tight flag, or we get some type of pullback back into our previous level of structure resistance, now expected to act as support. And then we look for an extension higher. So either way, a cool opportunity to keep an eye on here on the New Zealand yen as we get going on this new week of trading. So real quick, want to keep you updated on the DKC strategy. If you guys are new, this is a strategy I've been trading, started first week of April 3rd. It's a strategy that's a little bit outside my comfort zone, and I wanted to do kind of a week-to-week update so you can see what the reality of trading looks like, the good and the bad. And we started off good for 1 week, and then it got bad for like 7 straight. But last week we had a major week, about a 13% return, hit at a much higher than expected win rate. So I expected us to kind of revert to the mean this week, and that's exactly what we did. 14 trades, which is a little bit higher than usual. Usually it's averaging about 9 a week. about a 36% win rate, which is the expected win rate for this strategy. And we ended up getting about a 1.53% return for the week, which was delightful. Again, I'm a believer in numbers. So whenever we have a massive heater, so a hot streak in the market, I expect losses to come to even it out. So I fully expected a negative week here, and it's a pleasure to get a good week again so we can keep this kind of hot streak alive. What that does for us for the year is it puts us at about 95 trades, so just about at that 100 mark already. You can see a pretty high frequency trading strategy. It is on the 15-minute chart, so it is more of a day trading strategy. Win rate is 35%, which is, again, that's that expectation. Anywhere between low to high 30s, like 32 to 37s is what I would expect. Average win for the year is averaging about a 2.2% or 2.02, percent return, and that average loss is always going to be 1%. Year-to-date return is going to be a 5.6% return, and given how we're about 2.5 months in, 2 months in a week or so, and considering kind of the drawdown that we were in, that's not bad. If we can consistently churn that out for the rest of the year, I will be very happy. So a good start to the DKC, or I should say another good week of the DKC strategy, and I'll continue to keep you guys updated as the weeks go on. Before you guys head out, do me a favor, hit that like button, subscribe if you're new, and if you haven't already, make sure you check out the Trading Coach podcast. We've had some awesome episodes lately. The feedback has been amazing. Glad to see that so many new people are checking it out, and they're kind of excited to see that there's so much content here where it's basically like an encyclopedia where they can kind of just enter Trading Coach podcast, enter the subject that they want, and boom, they get a few episodes that pop up that kind of answer the questions that they have. So that's really cool to hear. That was one of the reasons I started it, to kind of give this resource, not to be morbid, but like when I'm done and I pass on, and I can continue to kind of help and influence traders. But great to see that I'm doing it while I'm still alive, of course. So until next time, plan your trade, trade your plan. Who you guys got in the Champions League final? Type it below. We're rooting for Man City in this house, but can they pull it off? Let me know. All right, take care, gang.